For more on the market, so I want to bring in Aadil Zaman, partner at Wall Street Alliance Group. Thank you so much for coming on this morning. Let's get to Tesla, reporting its latest numbers after the close yesterday. That company beating big on delivery numbers and predicting strong vehicle delivery growth. I do want to disclose that you own Tesla stock. So what did you think of the report? What stood out to you?
I think great to be with you, Jill. So this earnings report by Tesla, we feel was phenomenal. They did extremely well. But I think, the challenge that's going to be there for Tesla and other, big tech companies is that their stocks have run up so much that anything less than a perfect earnings report could cause the stock to stall and possibly have corrections. We feel that when Elon Musk signed up for going on Saturday Night Live, we knew that the earnings are going to be good, right? I think the trillion-dollar question for Tesla right now is that are they going to be able to withstand in the long term the competitors, or are they going to be able to retain their first mover advantage as well as innovate and develop different revenue streams and become more like a Microsoft? I think time will tell, but this was a solid earnings report, a solid beat. We are generally very constructive on the electrical vehicle space because Biden administration views this as a key component of their infrastructure, and they're looking to, in their infrastructure proposal, looking to spend about $173 billion into this space.
It's funny, I had an analyst on yesterday who also said that about SNL, just trying to read the tea leaves, thinking that meant strong earnings. I noticed that you said Tesla, a tech company. Is that what you consider Tesla? And in that sense, who do you think Tesla's biggest competitors are? If Apple, just say, actually did develop some type of electric vehicle, would that be, you think, the biggest competitor to Tesla? Or do you think other traditional automakers, as we've been seeing, developing electric vehicles, that might impact Tesla sales?
As of right now, it's basically the traditional ones like General Motors and Volkswagen. They are the main competitors. But the test of time for Tesla is really going to be, if you look at Microsoft, for example, you look at their balance sheet. They have so many different revenue streams, right? And Tesla is trying to do that. Will they be successful in doing that in the long term and be able to offer maybe different products, maybe different services to retain their brand loyal customers or not? I think time will tell. But Jill, we are also very excited about the earnings that are coming out this week from the other big tech companies like Microsoft, Amazon, and Google. These companies, if you look at their earnings that they reported in the fourth quarter of 2020, they reported phenomenal growth in their cloud divisions. And we feel that with business spending accelerating in 2021, we feel that the cloud divisions, the cloud businesses in these companies is going to continue to accelerate very rapidly. And don't be surprised if you see some very positive results announced by these companies, especially in light of their cloud divisions.
You were saying that for these companies, it's almost like the earnings reports, because they are pretty expensive right now, the earnings have to be perfect or better than expected, and the expectations are so high. What, besides for just missing on earnings, are there any other things that could really bring the tech sector down right now?
Great question, Jill. So, everyone's talking about the capital gains taxes. What people are not talking about is which we feel is potentially the most dangerous proposal for taxes, is the proposed GILTI tax of 21% on the foreign earnings of U.S. companies. Now, all these large tech U.S. companies, they have a significant portion of their earnings coming from abroad. If we just take Apple as an example, which is a company that we love, by the way, but if you see more than 60% of their earnings come from abroad, and Jill, the effective tax rate that they pay on those earnings is 9%. So essentially, a 21% tax, GILTI tax on those foreign earnings could really increase the tax bill for these type of companies significantly. So what we are advising clients is that, yes, we want to have exposure to the core big tech companies, but at the same time, we also want to be diversified and have exposure to other companies that could potentially benefit from Biden's proposed infrastructure plan.
On the note of that infrastructure plan, which sectors, which companies do you think could really benefit?
So the infrastructure, one of the themes for us at Wall Street Alliance Group this year has been to invest in thriving, fantastic businesses that will get a boost because of Biden's infrastructure plan. And this is just a proposal, but because given the strong position of the Democrats in the Senate and in the House, it gives us a good idea of the direction things are going to go into. So, one of the issues that Biden brought up was that more than 30 million Americans, Jill, are without high-speed internet access. Now, can you imagine that in an environment where we're sitting at home and working, if you don't have proper internet access, you are handicapped, literally. And this is a bipartisan concern. So what the Biden administration is proposing to do is to invest about $100 billion into broadband, and where this will significantly help companies like AT&T and companies like Verizon. We see opportunity in a more niche play, which is a company called Crown Castle International, which is a leading real estate investment trust. It's actually a wireless tower real estate investment trust, and they have 40,000 cell towers all over the US, which could be instrumental in bringing a high-speed internet access to rural America.
All right, great insight this morning. Really appreciate your time. Aadil Zaman, partner at Wall Street Alliance Group. Thanks so much.